Hello everyone. This is Emporos Research, and we're back today to show you a trading tactic, or strategy if you want to call it that. And without further ado, let's get right into it. So first things first, we have Bitcoin up on the screen, and we will get back to exactly what this situation means in just a moment. To explain the tactic I want to share with you all today, we're going to look at something a little different, but sort of similar. Gold, the commodity gold. Let's go to GC1, the futures contract for gold, and let's share this trading tactic in its entirety. XAU might be better here, but I'm just going to draw it from scratch so you guys can really see what I'm talking about. Actually, we can do both. Hold on. I already have this drawn out. That's why I want to switch to it. So, this was gold. This was our trade. We were longing the supports here and running it up for quite some time, since December, basically. We had a nice run. Resistance, as you can see, right? We can probably add that in here so you can clearly see it. Make it red. Make it bigger. A little too big, but there we go. Now there's a resistance, a run up, and this is when it starts to crawl, right? You see it starts to crawl, hit the support, goes up, doesn't quite make it, breaks down again. Now this should be your warning sign right here, this break. Warning sign 1. This crawling movement down is warning sign 2. And this is on a daily chart, so once it breaks, you should be like, okay, you gotta be careful here. And then it doesn't quite make it up to the support, now turn resistance, right? And we ended up seeing a 4 to 5% drop in the commodity. Now, patience is crucial when you determine resistance and support. Do you always buy support and do you always buy resistance? No, not always. Now let's go back to Bitcoin. Do you see where the supposed support is right now? And this compression, like what is that? Only rarely do you see a fake out type Reaper candle where it goes like this. It doesn't just happen randomly. Sort of like this, but this is after an extreme reaction. So we have an extreme reaction and a bounce. It's normal. And then a back to the mean, and then correction, consolidating. If it goes any lower, I would say under this level here, 45,000, right? This would be the trigger. Clear this out of my way. This would be the trigger that we would see a drop. And it looks like this has been floating around 45.6, 45.5, and now it's crawling back down. It's really weak. I wanted to catch this live, and I just might. So this is what we'll see, most likely. This is my pivot that I drew a while ago, because price sort of nestled near there before. It was always, yeah, kind of stuck. And a breakout triggers your longs, and now the correction, we might see a steeper one down to here, 38 even. So market mapping, I can go into more detail about that. I also have a pivotal grid. So here's the level I'm talking about. I drew it manually. I have a phantom one here, and then the strong pivot also pretty close together. Now, the tactic is shorting and longing momentum. When you see weakness, you don't always want to long supports. And this is a normal trade too. Like you can take this trade, you can take this trade, you can take this trade. Maybe this one though, you'd be a little bit concerned, right? Because it's really starting to crawl. So you might see something like this. Movement up, movement down, really cutting it close, and then the extreme drop, where it will float around again. So your trigger will be a break down below 45. That is when you just initiate the short. And this also works for longs. We can look for a long situation. This spotlight is mostly on Bitcoin, or I think it's going. As I say, it's down 38k maybe, 40k at the limit, and 43 is a pivot. So areas to do business will be this level for a bounce back up to 45. Because as you see, we bounce hard. 48, 48, 45. This is a range. Rearranging before we go up or down. So let me give you a secret. No one actually knows where the market's going to go. We can only establish a bias and assume our risk. Yes, keep that in mind. We can only establish a bias and assume risk. We do not know where the asset price will go. You can have conviction all you want, but at the end of the day, you're still taking a risk. So, if you really wanted to speculate, you could just jump in a short now. But it could go back up to the top of its range. You do not know. You just have to keep that in mind. So, here is the range. 48k. Let's make this black. Let's make this black also so we're not confused. We're not treating this as support. This market is currently in a downward trend. Now don't use bull or bear, because that if the market starts rallying and you say you're bullish and it does this, it messes with your mindset. Mindset is everything in trading, and I hope I'm not rambling on too much. Hope it's concise and I make sense. We showed gold, we showed the support break. Not quite sure why gold's going down. We have silver and platinum, but they held their own, but mostly the metals corrected, and Bitcoin is considered a commodity, and commodities got hammered on Friday. We have to look into the underlying fundamentals of the dollar, stimulus, and a few other twerks with the yields and see why that is what it is, but that is a fundamental video for another time. We are focused on this trade tactic here right now, which is a breakdown and breakout, especially during ranging markets. Ranging markets do a lot of funny stuff like this. We have our initial sell-off correction, and the wick, it should be a big telltale sign, right? Wicked into the support, finally measured straight on into the range. And we flipped into this. This is a good example here too. We have a three-pronged support, right? Hold, held, bounced, and finally a giant crash. Doji underneath our pivot, 48.3, which was used, look, it was used 3 times. 1, 2, 3, and like I said, we're gambling that there might be a 4th, and this could even lead to a breakout. Or we keep the selling pressure and it fails, and we see another range go down, and the daily chart becomes something in this area, in this territory. And now to fully wrap this video together, there we go. We had it, our drop, 45 down into 44.283 at the low. That is about if you did it at around 40, this magnet's on. If you did about 45.045, you got about 1.5%. And you have a decent thesis now to get out at 45, because then we will continue this 3-pronged assault up. Or if it rejects, we will see our 3-pronged bounce down to 1, 2, 3 levels, depending on the strength. And with that, see you later, guys. Take care. Hope you enjoyed this spotlight.